That's what I'm trying to solve. That's my mission. That's my vision, for the world where financial freedom is available for everybody everywhere.
What kind of things would you say to people that are starting out in 2024, 2025?
Risk, it doesn't necessarily mean you're going to fail. It means that it's an opportunity or a threat.
What would you say for people that are watching the markets right now, just to say, kind of keep going and don't give up?
It's easy to give up, but when it's easiest to give up, just don't do it.
We are back in the Binance studios, and if you are familiar with crypto trading, you will know the man sitting next to me. I'm joined by none other than the CryptoBirb. Welcome to the studios. It's great to see you.
Thank you so much, Jess. It's been great to see you as well. Beautiful video.
Thank you so much. I'm glad you enjoy it. And actually, the studio is a great platform for conversations like this, for people that are watching that are maybe getting to grips with the cryptocurrency market and picking up new skills. I thought I would use this time to ask you, the CryptoBirb, some questions about cryptocurrency trading, because it can be daunting, and I'm sure for everyone watching, they can agree. So maybe just before we get into a kind of crypto trading 101, a little bit of information on you and your journey into the space and your relationship with crypto, let's say.
Oh, wow. It's a love or hate relationship that you only can get, right? In the very extremes of the roller coaster. My name is Adrian Zduńczyk. That's a full name. Some people know me as CryptoBirb, right?
Yeah.
And I always say that I'm a CMT, that is a charter market technician. Accreditation is like an OG Wall Street accreditation. There are only like 3,000 people in the world with this title, and I'm the only one with my country, which brings a lot of liability, responsibility, and opportunities basically to promote this healthy approach, this standardized approach, this quantitative approach to crypto analysis, right? Which is missing because crypto is much of a roller coaster to an extent that there's so much misinformation, so much of the false kind of like, just information flying all around, and many other bad actors are spreading all this misinformation, targeted or not targeted, but it leads to the market inefficiencies, leads to people not being able to make rational decisions and good choices, informed choices, simply because they are misled by the lack of proper information, right? So that's what I'm trying to solve. That's my mission. That's my vision, for the world where financial freedom is available for everybody everywhere.
Yeah.
So that each and every single person has access to this reliable information, and I'm just trying to put it on the table to the people, to the traders, to investors, to students who want to come and learn, about crypto in a reliable manner.
Yeah.
And also what kind of like helps shape all this intel and this experience of having lost millions of dollars myself and made all possible sorts of mistakes to the businesses, to the institutions on their Web3 Accelerator side.
And I think it's really remarkable what you do as well, because you do have open source information on your socials, which we will link in the description. And you've mentioned there some of the kind of debunking some of the myths, consistent education, and also, I guess, sharing your information too and your experiences. Let's use some of that. I'm going to pick your brains a little bit, and maybe we can start with risk management and risk management strategies, because this is a big one for the crypto industry. What kind of things would you say to people that are starting out in 2024, 2025 that are kind of key pillars to get started with on their investing journey?
Correct. And I'm really happy that you brought the risk management side of it, because it's such a popular term, yet it's such underused, right? It's so underused these days because crypto is it typically shows only the upside, like to most of the people. That's what they see, right? That's what they see, because people promote all the wins, hiding all the losses, and at the same time building this faulty, mistaken illusion of that the wins, that it only goes up, that it only succeeds, they can only make money off of it, right? While the reality is that you see 1% out of 100 make money, just flash it all over the internet. $100 are gonna try to mimic the same thing. They're gonna lose all the money in the process. Right, so the and that's the reason that it happens is exactly the lack of risk management principles, right? Risk management, by definition, is how we manage those dangerous situations. Because risk, if we were to define it, right, is an exposure, is a situation that involves exposure to danger. It doesn't necessarily mean you're gonna fail. It means that it's an opportunity or a threat, right? Depending on the context, and it may play out well, it may play out not well. And our job is to protect against those situations that play out not well, right? So while keeping our eyes up, while looking up basically, and just observing what's happening, all the trends and all the fundamental reasonings, where all the ETFs inflows and Donald Trump's taking on the Bitcoin strategic reserve, executive order, right? And stuff like that. There's a lot of bullish catalysts. However, if we focus only selectively on the bullish catalysts, we literally lose off sight those risks where Bitcoin falls 30% in a matter of a week or a month. And those are the types of volatility corrections that most of the people cannot withhold because they play with leverage, right? Because, even 3-4x leverage that already gets you off the map, off the plan, if a situation like that happens. So something as simple as reading about, the best risk management principle. It can be general, as in do not put your eggs into the one basket, just diversify. I had a couple of options. On the other side, some a little bit more quantitative ones, as in there's something called optimal Kelly formula, right? To figure out the optimal position size for every investment. Every investment, depending on the risk conditions, on how volatile the market is, can basically tell you, okay, how much position you should have, how much money you should have invested in that position, in that altcoin, in that Bitcoin, in that whatever asset vehicle you have against the total portfolio, right? Because it may happen that because of the volatility, the $5 that you invest, the volatility spikes up twice. And all of a sudden you are playing with $5 just as if you were risking $10, right? And repeating that, on a larger scale, adding zeros basically may cost you a fortune.
Yeah. And you've mentioned there a little bit of kind of like altcoins plus BTC. So maybe I can ask you your input on portfolio allocation and how to diversify your portfolio. Because you've said that don't put your eggs in one basket, which I think is a great tip. It's always not financial advice, do your own research, but portfolio allocation is very important. And I think at this time of year, more so than ever, we've seen, as you've mentioned, strategic Bitcoin reserve conversations, spot Bitcoin ETFs introduced early last year. How, as a new investor / trader, would you even go about starting to work out what kind of tokens or assets make it onto the portfolio? And then to what percent do you have exposure to them?
Good question, Jess, right? So I will quote and paraphrase what for instance, Vanek, the ETF provider, they've put a research in terms of the best optimal portfolio allocation for just like you would typically have 60-40 portfolio on the bonds and stocks, and the stocks and bonds in the typical kind of like a simple portfolio. Now in Bitcoin, the ratio to Ethereum, for instance, the two most liquid options has been noted as the 70-30 or 80-20, with the note to 70-30 as the most optimal one, depending on derived from the risk-adjusted returns, right? Because the risk-adjusted returns are those returns that we are actually effectively having in play, right? Because just for an example, if an asset, like take an S&P 500, it makes, if you're lucky, 12-15% a year, right? It often has a lot of drawdowns, a lot of corrections. Just, over the last 3 months, we had a drawdown of more than 10%. So that's already 10%, of a 3 months. And then typically, if you annualize it, you arrive at a 20-30% retracement on the S&P in an annual scale. And then you oppose it against the profit that you can get of, 15% or 20% if you're lucky, which means there is a ratio smaller than 1, because this risk-adjusted return, as in Sharpe ratio, it's called, right? When you do divide the reward, the profit that you can get out of that against the risk, for instance, like a standard deviation or the measure of the volatility, how much the fluctuations there are, it may happen that S&P 500 is not a good asset at all, right? Because, Bitcoin, for an example, is a 10x fold. Is a 10x basically better asset than those terms, because it generates 145% annualized return over the last 14 years, while the volatility is at the level of 70%, right? So even you have volatility 2-3 times bigger than on the S&P, the profits that you can get out of Bitcoin on average are 10x fold, 10-fold bigger, which basically means that the Sharpe ratio, the risk-adjusted returns for Bitcoin are 10x better basically than for S&P 500, which means that $10 that you put in S&P against Bitcoin, well, Bitcoin is going to work so much better for the capital that you put in, right? So at least putting a percentage of exposure to those risk assets, can definitely build up, percentage points of profitability of the portfolio, of the equity curve, while at the same time keeping the risk very minimal, which is why it's so popular to central banks and the interest side and the investment banks and ETFs, right? There's so much institutional adoption. But altogether, I'd say having as the baseline the 70-30 Bitcoin against Ethereum is the best kind of like an outcome. That's at least based on the Vanek research. I'd say that this so-called momentum investing, where you follow the trends rather than assuming the opposing side of this, right? So you don't short the bull market, same way as in you don't buy the bear market.
Yeah.
Right? You let it play out. You jump in a little bit late after you have got a lot of different indicators confirming some stuff, like confluently confirming. And as a result, you are a little bit late to the game, but at the same time, you have a confirmed signal. that's my type of investments, right? Where I'm a trend follower and I position myself always in the direction of a trend. And by that, I need confirmation. I get late, right? I'm a little bit late to the game, but at the same time, this trends, I don't want to say perpetuity, but the continuity, right? Because all those herding instincts and people jumping on the bandwagon and friends calling the other friends and families calling grandmas that they need to buy Bitcoin. It's all a network effect, chain reaction. So all of that means that the momentum investing principle says that you may need to put your money into what works against what doesn't. So it's opposite to fundamental investing, because fundamental investing, like Benjamin Graham and Warren Buffett, they would tell you that you need to buy cheap stocks, the cheap valuations, cheap price to earnings, cheap price to book value, cheap price to sales and stuff like this. And it means that they are undervalued, sure, but at the same time, in the reality of crypto, first of all, you cannot really transpose it so well because it doesn't have earnings, cash flows and stuff like this. It's not going to move, right? It doesn't have this community driver. It doesn't have this momentum behind it. So the momentum investing says that the outperforming assets are going to continue to outperform most likely, then they are going to return all of a sudden. So if something works and it's going like a speeding truck and it's raging at you, you better step away before it just runs you over, right? So you never short the bull markets, you never long the bear market, because it's just gonna, flip you upside in on the moment.
We're getting some great alpha from you. We're going to have to get you back for a full breakdown. But just quickly before we wrap things up, I'm curious for people that are starting out and they are looking into maybe moving from being an investor into using some more of the trading features that we do have on, for example, like Binance. What kind of trading features would you say, and maybe one or two, that are good to start off with, that are, as you mentioned, minimal risk, easy to experiment with, and something which can help you on your trading journey while kind of learning along the way without being too exposed to some of the more technical features?
Thanks, Jess. So that's a very fair question, right? And I think a lot of new users that are coming to the platform, such awesome as Binance, I think they should seek simplicity, right? They should seek for the simplest solutions, because most of the time, the simplest solutions work the best for us. Because if we try to over-engineer, outsmart ourselves, we become the victims of our own success, quote unquote, falling for the failures. And so the simplicity means, for instance, I would always go for the spot orders instead of, the long and short futures, right? I wouldn't touch options per se.
Yeah.
I wouldn't touch leveraged positions, depending on the margin borrowing, for instance. I would only go for spot, simply because I'm speaking from my own experience when I've blown up multiple accounts in the futures. I did put in some money, for the start as my own margin, and I made 10x, 20x, 30x on top of it, right? And I was like, okay, cool. I mean, little money turned into big money. And all of a sudden, after some things are going well, there's this 20, 30% retracement of Bitcoin that happens once in a while, and it knocks you out, right? And this is like a repetitive scenario. You're going very well, you're doing very well, you make multiple folds, and then, just one crash, one candle, one moment, one day just brings the whole thing, blows you up. And there's, a kind of liquidation notice, and I had a lot of those.
Yeah.
All right. So touching the leverage is something deadly to the portfolio most of the time. Touching margin, on the leverage margin side, I wouldn't say it's a good choice for the starters either, right? Something as simple as the spot orders, something least higher work-ish, if you know what I mean, the least interesting, the least, I should say, creative, the simplest is actually the best, because it's the simplest, because it's something that you don't have to have an expansive knowledge on. It still gets you from point A to point B, and you don't have a risk of liquidation.
Amazing. Final note, because crypto, as we know, is a long game, underlying technology, the adoption of digital assets, freedom of money globally, we're moving in the right direction, and this is such an exciting year. What is one bit of advice based on your wealth of knowledge? And I've been following you on content for such a long time.
Yes.
What would you say for people that are watching the markets right now, just to say, kind of keep going and don't give up?
Yeah, don't give up is exactly this, right? Because it's easiest to give up, when the times are rough, and seeing the correction like just happen, 30%. There's more likely 2 or 3 or those types of those traumatic big drawdowns, ahead before we see an actual market top. I would say that a combination of following the trends as simple as 200-day moving average, right? Simple, the moving average available for every single, on every single Google page you Google it. Well, Bitcoin, it tells you that it's basically at about $84,000, maybe a little bit higher last time I checked. And it's going up for the last 2 years, which means that for everybody who's holding Bitcoin on over 200 last days, they're making money, right? And that's the direction of the market. That's the main direction. That's the main kind of like a moving current, and that's defines the bull market. So that erases the question, okay, are we in the bull or are we in the bear market, right? That erases is because, the simple indicator that represents the bull market line or bear market line keeps going up, which means it's a bull market. So knowing it's a bull market, we play to the upside. And if we play to the upside, all of a sudden those massive corrections become the buying opportunities, right? Because we have an undervalued situation in an overall uplifting curve. So observing the trends, focusing on the evidence instead of trying to guess, because, okay, if Trump says this or something else going to happen, then I'll do this or that or that or that. And it never plays out because there are 50 other million, moving parts that are just coming through to destroy this whole plan. While instead, all we can do is just look back, take reliable portion of data over the last 14 years, over the last 200 days is enough. Because if an asset keeps moving up 200 days in a row to the upside, then what sort of coincidence are we talking about, right? There might be a slight chance it's a coincidence, but it's not going to continue for a long time if it's coincidence. Yet it continues for 2 years straight. So that's another coincidence. So it's a bull market, local correction. The night is youngest, right? The night is darkest right before the dawn. Yes, I would say. And that means just simply to not give up. The fireworks are still ahead. Everybody's going to be flying, excited about crypto, and all the Bitcoin is going to be on everybody's mouths pretty soon. March, April, May are very positive months on average, especially towards April and May. Everybody knows that selling may go away. So a lot of good reasons to wait ahead. The bull market is still on. The peak is not yet in. The corrections are temporary. And it's easy to give up. But when it's easiest to give up, just don't do it.
Amazing. I always love having the conversations with you. Thank you so much for coming into the studios today. It was such a pleasure. If you're not following CryptoBirb yet on socials, do make sure to do so. Absolutely fantastic. And we're going to have to get you back on the show again. It was so good to speak to you. Thank you.
Thank you so much. And do make sure also to follow Jessica Walker and her incredible works on that.